We join hands with families to resolve the housing crisis. Real Estate Help Centre. We're here to help.
Hello team, welcome to another Real Estate Help Center video class. Today the class will be about what a forbearance agreement is. This is a tool that we can help the homeowner to understand and use in order to help resolve their mortgage situation. Why forbearance, you ask? Well, going into forbearance might seem daunting for many borrowers, but it's really a lifeline whenever life happens and things occur that they did not expect or plan for. And understanding the basic facts helps to alleviate some of their worries. So it's part of your responsibility, teams, to educate the homeowner on not only the positive of this agreement, but also the negative. And one of the negatives is that they will possibly not be able to refinance for up to a whole year after their forbearance agreement has come to an end. And they also need to understand that this is not a long-term solution, such as a loan modification or a deferral. It's only temporary. Okay, the forbearance agreement. This is really an awesome tool for those who are needing to have a break temporarily with their mortgage payment. And as mentioned before, it's normally a disaster or they get sick or something horrible happens and they're unable to make their payments. And they'll call the bank, and one of the tools that they have, or homeowner programs that they have available, is a forbearance agreement. There's a deferral, there's a modification, there's a repayment plan. But this option that we're talking about today is where the lender agrees not to foreclose on a property that the owner is in default with their mortgage. And preferably, you want to contact the bank before you're in default. Otherwise, each month that you're late, you're going to have late fees, lawyer fees, penalties tagged on to what you owe them. Whereas if they reach out to the bank prior to missing any of their monthly payments, they're not going to have any of that. So say, for example, the borrower asked for 6 months to not have to pay anything, and their regular monthly payment's $1,000. Well, after 6 months, typically they're going to have to pay it in one lump sum. Now, COVID has changed some things, and we'll get to that later. But the traditional method was, okay, if I need 6 months, then at the end of 6 months, I'm going to pay $6,000. But if I, as a homeowner, if I wait a couple of months and I'm getting penalized and the lawyer's after me now, and so now my $6,000 is $10,000, all right? So it really behooves the homeowner to contact their lender immediately upon finding out, hey, I may not be able to make my mortgage payment next month. But we are Real Estate Help Center, and what do? We help homeowners, and particularly those who are in pre-foreclosure. So chances are, when you're sitting now down with a homeowner, they're already going to have penalties and late fees and lawyer fees and all of that. So one of the tools that you can recommend to them, given their situation, is going to depend, is this forbearance agreement. And this is going to give them time to get their financial situation much better. And in some cases, the lender can agree to extend their forbearance agreement if, say, for example, at the end of 6 months, they are still unable to meet their obligation and to pay the $6,000 or whatever it is that they owe. So when we sit down with a homeowner, we want to educate them on all their choices. And Eric was mentioning about the deferral, and that's one of the choices that we can get into and we'll talk about later. But with the COVID situation, those who are backed by a federally insured program, if it's FHA, Fannie Mae, Freddie Mac, they do not have to pay a lump sum at the end of their agreement. Their lump sum is tagged on immediately to the end of their note, which is an awesome thing. Private lenders, some are doing that as well, but it is not a rule or a law or controlled by the government. And Eric, what would you like to say to the team about?
Okay, our forbearance agreement, guy, is basically the same process that we when go to a bankruptcy. Like in bankruptcy, we have to agree in a period of time that we're going to pay back and we have to agree on that. But we have already added to the amount late fees, lawyer fee, collection fees, and then we added another lawyer fees, and then at the end, the loan amount that we're gonna negotiate is not only the $10,000 that Jean mentioned. It's gonna negotiate probably a debt of $18,000. So the payment is gonna be harder, and that's gonna affect our credit. So when you think about a forbearance agreement, it's a fantastic time because you're not going to pay any kind of interest for 6 months, and at the end of the 6 months you have $6,000 only on debt. But not only that, that debt can be renegotiated again before the forbearance agreement ends. And something very important is that the homeowner have to reach the lender before this end.
All right, class. So please note, if the homeowner requires some more time, and at the end of the 6 months, if that's our example, it's up to them to reach out to the lender and say, hey, I still need more time. So, okay, let's go on to the next slide. How does a homeowner repay the forbearance agreement? Traditionally, at the end of the forbearance agreement, a lump sum of the entire missed payments is now due. However, COVID has changed this for federally backed mortgages. Lenders covered by federal forbearance rules cannot require a lump sum payment as it is in traditional methods. However, you can, if you so choose, you can repay the entire missed payment as a lump sum. Or you can repay it in the form of a repayment plan. You repay the lender by making larger monthly payments once the forbearance period ends. So if you owe them $6,000 at the end of 6 months, instead of paying the $6,000 as a lump sum, you take that and say, for example, $200 gets added on to your monthly mortgage payment. Or a loan modification. The lender changes the loan terms. Either the interest rates can be reduced, the loan term extended, or both. Okay, team. A forbearance plan is pretty simple, and the key takeaways that I want you to remember are these. A mortgage forbearance agreement is a plan made between a lender and a borrower who is struggling to make mortgage payments that attempts to allow the borrower to fulfill the mortgage obligation and avoid foreclosure. And the agreement generally reduces or entirely suspends mortgage payments for a set time period during which the lender agrees not to foreclose on the property. It is intended for borrowers with temporary financial problems and is not a long-term solution. And in some cases, a lender may agree to extend a mortgage forbearance agreement beyond its initial end date. So this is an awesome tool. Please educate the homeowners when you get there to the appointment, and let's make this happen. Okay, team, as you are very well aware of, COVID has had a tremendous impact upon us and the entire world, and that includes the mortgage world. So would you please take a moment and pause this slide and read what the economic impact is so that you can be educated and so that you can help our community. Thank you for your attention, and I will see you on the next class.